Alright, so cool. In this video, I'm going to teach you two concepts that's going to revolutionize your trading. The first is going to be order flow, also known as institutional order flow. The second is going to be fair value gaps. Institutional order flow is basically the method at which institutions analyze charts and determine what direction the market's going in, how they want to position. And the way institutional order flow works is basically price continues to make higher highs and higher lows to determine its trend. So the market began printing in a range here, and then it broke out. And at this moment of breakout, the market is now starting making lower lows on the intraday chart. But on the daily chart, it just looks like a continuation of downward movement following the break of this level. And this tells us that we're now making lower lows because price was unable to break this high. We've now started making a new low and price is making lower lows. On the daily chart, this is known as institutional order flow because the daily chart is the most used chart by institutions. The daily chart, the weekly chart, and the monthly chart have the highest probability setups because they are the highest probability charts. They're the charts that the most number of market participants are viewing, and therefore institutions focused on the daily chart. Alright, so the reason why institutional order flow is important is because once the market breaks a level and fails to make a new high and then follows by a low, this candle here where the break occurs is an indication of institutional order flow switching to the downside. And that's what we see here. And the moment this occurs, we start a downtrend. As seen here, we're making lower lows all the way up until this point. Price comes up here. We retest the low. We fell here. As you can see, price was unable to hold below this level. And then we break above, and now we're making higher highs again. And the market is printing higher highs. This was a switch in institutional order flow. This is the easiest, most basic concept you can learn in trading. And once you know this, all you need to do is worry about positioning and signals. That's it. So as you can see, a breaking structure on the daily chart is the highest probability setup. So for you to begin your trading week, you should analyze the daily chart to determine where the market's going. I'll show you a few more examples of this. Let's go here. So price is trading in, I wouldn't call this a range, but price is trading higher, as you can see here, making higher highs, higher lows, higher highs, higher lows. Until here, we make a lower low. We fell, now we're printing lower lows, but then the market shoots back up, pulls back, and now we're making higher highs again. And that's how institutional order flow works. Because this is US 30 chart, or it's an index chart, the bias is usually an uptrend. So pullbacks are usually bought up. So when there's a shift in institutional order flow to the downside, it usually provides buyers with an opportunity to take price higher for a cheaper price. You see this has been going on for quite some time. Institutional order flow has been up. There's situations like 2022, the year, where the year began in January, obviously, and for the year price was down. But on average, most years, the markets are printing higher highs and higher lows in an attempt to go higher. So if you just follow institutional order flow, you will get the correct signals on when to buy the market back up. And we can see this from here. The market's just been trending higher. Yeah. So that's the first thing, institutional order flow. But the next concept I'm going to teach you really quickly is something called fair value. Fair value gaps, to be exact. Fair value gaps are a representation of pretty much the most optimal place to buy the market, or the most optimal place to position, I should say, because you're not always going to be looking for buy trades. What I mean by this is when there is a huge gap in price, this is inefficient pricing. What this means is a lot of people bought all through this period in this area, and this is the most optimal place for institutions to buy, because of this huge gap. It tells us that there's so much buyers in this area that this is the best place to position. This is the best place to buy. So what institutions do, because they want to get the best price, what they'll do is wait for price to pull back into the fair value gap. And once it does, they look for their opportunity and pull the trigger. Boom. And they've bought it and they're positioned and they're taking markets higher. I can show you many, many examples of this, but the homework I would give you is go and look back in the charts to see how price transitions from one order flow direction to another. So from a trend higher, an uptrend, into a downtrend. And during the uptrends, I also want you to look at where price pulls back into. Does price pull back into a gap? If price pulls back into a gap, then you can continue to do this over and over again, and before you know it, you will figure out a way to position into these markets. I'll give you a quick method for being able to draw a gap accurately. So the way that institutions draw their fair value gaps is from the low of the previous candle, the gap that occurs. So that looks like this. The high of the previous candle here, and the low of the following candle. So this area between these two candles, this area is the gap. And if we draw this along, we're likely to see price pull back into this area and most likely be bought up. And let's just have a look at and see if this is accurate. Well, we had an attempt to buy it, but obviously we had a shift in order flow, and that's what caused the market to continue higher. But as you can see, price did still respect this gap, because once we swept liquidity here, and liquidity is another concept I want to teach you about, but once we swept liquidity and we drove back up into price, this happened to be November 5th, the election, you can see price continued higher. But there's so many examples of price pulling back into fair value gaps. I'm going to do another video on liquidity, because liquidity is also a very important concept to understand what it means when price shifts order flow to chase liquidity, and why liquidity areas present you with the best opportunity to buy. That's also extremely important to understand. But for this video, I'm going to leave it at that. I've shown you about fair value gaps and how they are usually retested. I've also talked about institutional order flow and how we have breaks of structure to the downside, followed by breaks of structure to the upside that indicate that a new high has been formed and price can now continue to the upside. So let's take note in this video. I hope I was clear in this video. If you have any questions or comments, feel free to post them down below in the comment section. Also hit the subscribe button if you want more videos from me. But yeah, let's take note.